So let's talk about Salesforce. The stock is at this incredible crossroads, and you gotta wonder, is this huge surge we've seen the start of a real comeback, or is it a trap just waiting to snap shut? We're gonna dive deep and break down all the technical signals to figure out what's really going on here.
I mean, after getting hammered for a while, the stock has absolutely roared back to life. It's showing some serious strength. So the million-dollar question is pretty simple. Is this for real? Is it a sustainable recovery? Or is this whole thing just a setup to lure in unsuspecting investors? Let's dig in.
All right, here's how we're gonna tackle this. First, we'll look at the big picture, the main conflict playing out right now. Then, we'll lay out the bull case, followed by the bear case. After that, we'll pinpoint the key price levels to watch, walk through 2 possible ways this could all play out, and then we'll get to the final verdict.
Okay, let's kick things off. What is the fundamental tension, the core conflict that's making Salesforce so interesting right now?
It all boils down to this. You've got this awesome short-term story, a really strong recovery, pushing the price up over $247. But when you zoom out, you see the longer-term trend is still pretty bearish. The stock is stuck below its 200-day average, which is a huge deal. So yeah, the bulls just won a major battle, but you could argue the bears still hold the high ground in this war. It's a total standoff.
All right, let's hear it for the bulls. What's the evidence that this rally has legs? Well, they've got some pretty compelling arguments on their side.
First off, just look at this volume. This wasn't some quiet, sleepy drift higher. No way. The volume on that big up day was massive. We're talking more than 2.5 times the average. That tells you this wasn't just a few people buying. This was a crowd. There's real conviction behind this move.
Now, volume is one thing, but the real story is about who's doing the buying. Is it the big money? And that, my friends, is where this really interesting number comes into play.
So what the heck is this thing? Well, think of it as a way to track institutional money, the big fish. And when you see a massive positive number like this one, it means the institutions, the smart money, are accumulating shares. They're buying, not selling. That gives this rally a much stronger foundation.
And the good news for the bulls doesn't stop there. The price smashed through a bunch of key short-term averages? Check. The MACD, which tracks momentum, just turned positive? Check. And the RSI, another momentum indicator, is strong but isn't even close to being overbought yet? Double check. That is a lot of green on the dashboard.
Okay. The bull case sounds pretty good. But before you get too excited, you need to hear the other side of the story. There are some serious warning signs flashing, and it's time to listen to the bears.
And this is Exhibit A for the bears. This number should make any bull a little nervous. The stochastic RSI is at a perfect 100. And that is a huge flashing red light.
So what does 100 on this thing actually mean? Well, imagine you're flooring it in a sports car. For a little while, it's incredible. You're going super fast. But if you keep redlining the engine, eventually it's going to overheat. That's what 100 means here. Short-term momentum is completely maxed out, which often signals a pullback is coming.
And the bears have more ammunition. They'll point out that, hey, the stock is still trapped below those all-important long-term averages. They'll remind you the trend over the last few months is still technically down. And they'll definitely warn you that jumping in right now, after such a big run-up, is a really risky bet.
So you've got strong arguments on both sides. It's a real showdown. So where is this fight actually going to happen? Let's map out the battlefield and look at the key price levels that will tell us who's winning.
Okay, here's the map. For the bulls to keep this party going, their first target is that ceiling right around 251.75. If they can break through that, then the big prize, that 200-day average near 260, is in sight. On the flip side, the bears are trying to push the price down to this floor at the 50-day average, around 243. If that floor breaks, the rally is in serious trouble.
All right, with the battle lines drawn so clearly, how could this actually go down? Let's game out the 2 most likely scenarios.
So here's the dream scenario for the bulls. The price just plows right through that first resistance level. That gives them the juice they need to go after the next level around 254. And if they take that out, it's a straight shot to that huge long-term resistance near 260. A win there could end the bear market for good.
But what if that overheated engine finally sputters out? In the bearish scenario, that overbought signal we talked about comes home to roost. The buying just dries up. The stock stalls and rolls over, falling back to test that critical floor at the 50-day average. If that support cracks, the bears are back in control, and they'll be aiming to shove the price all the way back down.
Okay, so we've heard from the bulls, we've heard the warnings from the bears, and we've looked at how this could all unfold. So, what's the verdict? Let's tie this all together.
Here's the bottom line. What we have right now is a powerful, convincing short-term rally that is running head first into a very stubborn, very formidable long-term downtrend. It's like a boxer who was on the canvas, just got up and landed a massive punch. The momentum has definitely shifted, but the fight is a long way from over.
So, if you're watching this whole thing unfold and you want to know the one number to focus on, the one price that tells the story, it's this one. $244.68. That is the line in the sand.
And here's why that number is so crucial. The analysis puts it perfectly. Staying above this keeps the bulls in charge. As long as the price stays above that level, the bulls control the immediate narrative. If it falls below, well, that's a different story.
So there you have it. The stage is set. The battle lines are drawn. We've got a classic conflict between short-term momentum and long-term trends. The only question now is, which one is going to win?